All right, almost there. Hello and welcome. This is Sergio Barrero, and we're here with another episode of RBL1 Live. We have a great guest today, friend Tessa Flippin, who is a VC out of Chicago and founder and managing partner of Capitalized VC. Thanks for joining us today, Tess.
Yeah, thank you for having me.
Yeah, so I've been following Tess since she launched, and super excited. For those that don't know about her, she's a graduate of Stanford University, got her MBA at Columbia Business School, is also one of the chapter board members of Black VC, and an entrepreneur herself, and venture capitalist. Worked for Tech Nexus Venture Collaborative before starting Capitalized VC. And for those that don't know, I'll hand it back to you, Tess, if you can share with the audience a little bit on Capitalized VC. What is Capitalized VC?
Yeah, so thank you for having me. So Capitalized VC is a firm that I just launched. We launched in October of 2021 officially, and we are a $10 million fund based here in Chicago. We're investing in Black and Latinx founders at a very early stage. But in addition to deploying capital to diverse founders, we are also focused on diverse LPs. And so a huge part of our firm and a part of what we're looking to do is raise 50% of the capital in our firm from Black and Latinx accredited investors in order to ultimately return capital to a more diverse group of individuals once this fund does really well. And so in that, what we've found is that a lot of diverse LPs oftentimes get a little scared or timid about investing capital for 5 to 10 years and not seeing any return for that, long term. And so what we're doing is actually working to increase liquidity of the fund in the first 5 years. And so that leads us to a pretty differentiated investment model where we're investing 70% of our capital into high growth technology companies that, are typically VC scale opportunities. And then we're also reserving the other, 30% of our fund to invest in CPG companies. And so these are typically companies that are developing a product, selling it direct to consumer or through retail or even wholesale. But we're, able to fund companies kind of outside of the typical VC opportunity, which also helps us to continually support diverse founders. So that's just a quick overview of what we're doing at Capitalize. But yeah, we're really looking to support diverse founders as well as, expand to diverse limited partners.
Great. And diving in there, can you share a little bit of, you mentioned CPG. Are there any other focus areas, stage, check size that you look for when startups, trying to think about when and whether to reach out to you?
Yeah, so I'll talk about, them separately. So we have the tech side of our firm. We are investing in enterprise related technology at the pre-seed stage. And so we're looking for founders that have an MVP and a small amount of early traction. We realize at the pre-seed stage, we can't expect them to have a ton of traction. And so we get that. But some traction. And then we are looking at fintech, advertising tech, and the future of work. And when I say the future of work, I really mean creator economy, passion economy, and gig economy, because we see the future of work being, individuals trying to monetize themselves or their passions or their talents in ways that allow them to create diversified income streams for themselves. And so that's kind of what we're looking for. And so really on the tech side, we love companies that are kind of serving the small, medium, and micro business. And when I say micro, I mean that like freelancer or that person who's, like an influencer or something like that. So that's the tech side. We're writing checks. Typically, our first check is going to be $200K, and we are following on at the seed stage. And so we like to find companies at pre-seed and then continue to support them in the future. So that's the tech side. And so now the CPG side. So these are typically companies that they've been around for at least a year. They're doing at least 100K in revenue already. So it's not like your idea stage CPG company. It's something that already has some traction to it. And a lot of these founders have been bootstrapped to date. And so a lot of them maybe have raised some grant funding or maybe have done a small, financing loan of some sort, but they haven't typically raised any VC before. And so what we're doing is coming in at this early stage And we're doing revenue-based financing. And so we're, investing in these companies, allowing them to, pay for hiring a team, pay for marketing, or pay for financing inventory, things that you wouldn't necessarily want to go and raise VC capital for just because it's way too expensive and you're giving away way too much ownership. But we're allowing these companies to, get some growth capital, growth-oriented, revenue-based financing, and kind of get to the next level of growth to where they can then go out and raise VC funding or raise commercial, lending. And so on that side of the table, we are really looking to fund food and beverage, beauty and wellness, as well as like clothing and retail more broadly.
Excellent. So in the same, so what made you go down the route of having the traditional venture financing, but also having revenue-based financing for CPG companies?
Yeah, I felt like I was kind of able to kill two birds with one stone. So I created this concept during COVID. In Chicago, I live in a neighborhood called Little Village. And so it's like historically a Mexican neighborhood, lived here for the past like 3 years or so. And during COVID, I just saw like the coffee shops closing down. And like these were coffee shops that just recently popped up like a couple of years ago. And so it was like really kind of like detrimental to the neighborhood almost. And so I was like, oh my gosh, like I would love to somehow be able to like fund these companies. And so that's kind of like what kicked off in my mind. But then as I went to, start my firm and this fund, I was encountering like all of these investors who were like, well, when do I get my money back? I need to know like where my money is. I can't just like give it to you for 5 to 10 years. And so I kind of like put 2 and 2 together. And I was like, well, what if I could create this like, structure around funding companies outside of tech, as well as create a solution for these limited partners who have different investment behaviors and needs. And so it kind of evolved from there. So we're not really funding brick and mortar locations unless they have some sort of direct to consumer or wholesale model. But I think that's really where the concept began.
Excellent. And for some of the founders listening in, right, they're probably used to pitching to VCs, understanding they're getting an investment for a slice of their business. If you can share with the audience that's not aware, it's like, how does revenue-based financing work?
Yeah, so it's definitely a term that isn't necessarily super utilized within the VC space, but there is like some precedence for this. There was a firm that actually closed down in the last few years called Indie VC, and I would say they kind of pioneered this model where they were, looking at funding companies in a different way and being able to allow founders to keep more of the ownership in their companies. Because, when you raise multiple rounds of VC funding, every single time you raise capital, you're giving away 15 to like 30% of your company. And so, if we could figure out a way to fund these companies that allows these founders to keep their ownership, like that's a huge win for a lot of the founders that, founders everywhere. And so what revenue-based financing is, it's different for a lot of different kind of organizations, but for us, it's funding these companies using something similar to a convertible note. So we're actually investing like convertible equity or debt into these companies. And so we're buying a portion of your company that ultimately will convert to equity one day. But the concept is that, based on your revenue, you're able to then make payments back to us, a small portion of your revenue. And in those payments that you're making back to us, you're buying back that equity that we purchased from you in the beginning. So over time, you're buying small chunks of equity and ultimately buying everything back. And so very little of the time on the CPG side will we really, look to take ownership in the companies that we make with those first investments.
Excellent. No, I'm glad you, thank you for sharing that, for especially as a new and innovative model that's well, it's been around, but entering more of the venture space, especially now. My hypothesis, and maybe this is a guess, I'd imagine also if you're focusing on communities of color, or even it could be lower income communities, there tends to be a lot of products, right? Like there tends to be that type of entrepreneur which is needed, but people always gravitate toward the high growth startup.
Yeah.
So
yeah, I would say that, Black and Latinx entrepreneurs are starting businesses at much higher rates than any other demographic in this country. And a lot of times they're solving problems that they see. And so, when they're like, I don't see like a shea butter line that like works for me, they're like, I'll just go create it. And then they start, like selling that to their friends, and then selling it to their extended, friend network. And then all of a sudden it like becomes something that can actually grow. And so I would say, diverse founders, if we're really looking to support diverse founders, we have to be looking within tech, but also outside of tech, because there's huge opportunities for supporting them in creating businesses that can really grow, but also be like sustainable businesses that can, be passed down to like their family and their kids, and, things like that, venture doesn't really allow for.
So taking a step into learning a little bit more about Tess, how did, if you could share with the audience, did you always know you wanted to be in venture? Like what has led you to start Capitalize VC?
I did not always know that I wanted to be in venture. It kind of just like, it happened to me, to be honest. And so I think it started in business school. I went back to business school kind of like later in my 20s, after I had worked for a while and realized I hated my current job and like the path that I had put myself on. So I was like, let me just go back to school. And I knew I wanted to pursue entrepreneurship. And I had a huge focus in social impact as well as entrepreneurship, and trying to figure out kind of like how those two things fit together. And so out of business school, I ended up starting a company. I became a founder. I was like, there is no better time than the present to be a poor entrepreneur. And so I started a fintech company. We were sending international money transfers throughout Latin America for like the underbanked or the unbanked population. And so typically somebody who might use like a Western Union to send money home to their families if they need to move somewhere else in order to make money. We were doing that, but we were doing it utilizing crypto on the back end. And so this was like 2016, 2017, when crypto was still like, nobody really knew what it was going to be. And everybody thought it was like used for, selling drugs and like buying guns, like around the world. And we were like, well, maybe we can use this like for something good. And so I started that company as a solo founder. Quickly after business school, got into an accelerator in Chile, and I moved to Santiago, where I ended up living for 2
Startup
years.
Chile. I'm also an alum of Startup Chile as well. So
yeah, Startup Chile. Hey. And so moved to Chile, stayed there for 2 years, met a couple of friends who then became co-founders because they were also kind of like crypto nerds at the time. And so the three of us were running this company, ended up getting into another accelerator, moving to Mexico City, lived there for another year. And then at that point, I kind of took a step back from the company. It was a point in time where we had like brought on some angel investors in Latin America, but we really needed to like raise like a real round of capital. And so I came back to the US because my co-founders one was Panamanian, one was Chilean. And so I was like, well, let me go back home and see if I can like drum up some interest in this funding round. And ultimately I wasn't able to do that. But in the process, I took a job. I was basically sending my resume around to like everybody because I was like, I need to buy groceries and pay rent. And so I was on Angel List, and I sent my resume to this guy who was working at TechNexus at the time. And I didn't even know what TechNexus was. I was just like, hey, here's my resume. And he calls me back like 2 weeks later, brings me in, and like the interview was like us like chatting about all the different places I had like gone and worked in Latin America and like all of the things that I had done during business school. And he was like, well, we're not looking for any full-time work help right now, but we would love to like have you come on as kind of like a venture partner before that concept existed really, but like help with deal flow, help with deal memos, and kind of just like help within like the diligence process. And so I was like, okay. I was like, this will be interesting for me, and help me to really understand what's happening on the other side of the table. Because at that point I was like, I'm just trying to be a good entrepreneur, but maybe this can help me in that process. And so I started working at this firm, part-time. Things with my company kind of like sizzled out a little bit. And so then I was looking for full-time jobs, and I told TechNexus, I was like, hey, I'm looking for a full-time position. And they were like, you're welcome to come on here full-time. You've been doing a great job. And so I started working at TechNexus full-time, and that's kind of how it happened. And VC was never like something I really studied in school outside of how can it make me a better entrepreneur.
Awesome. I appreciate, no, I appreciate the real talk, the transparency. Many, what is it? Tell people that are launching a startup, it's tough. Most of the time it fails, but it takes guts and everything. But even starting a new fund is still a startup as well. So
yes, very much so.
Coming back to capitalized VC, can you share a little bit more about your focus on underrepresented LPs? And the reason I ask this also, at a higher level, is assuming that some of the capital that may not be in communities of color needs to be invested in underrepresented founders. How are you thinking about that as you're also thinking about diversifying your LP base?
Yeah, so diverse LPs, I think it's a missed opportunity if we're not bringing on diverse LPs, because of any successful VC firm, like the typical model is like an 80-20 split between your LPs and your GP, like you as the GP. And so if we have no people of color on like the investor side of our firms, like we're just returning capital to all of the same people who have it today and who are able to invest in VC today. So I think like there's a huge opportunity for us to diversify that, as GPs, diversify our LP base and just magnify the amount of impact we have in reducing the racial wealth gap in this country. But I think what's been interesting for me is, talking to a lot of these Black or Latinx accredited investors who some of them like don't even know what being accredited is. Like they don't know what the definition is. They don't know that they're accredited. And so I also feel like there's this kind of like information gap of, financial literacy on that side of the table and like VC literacy at the end of the day. A lot of diverse LPs just don't know what's happening in the venture space or they don't know how to get in. And they're never really asked to be a part of VC firms because a lot of VC firms have really, really high minimums in order to get involved. And so it's just kind of like out of reach. And so I think, there is a huge opportunity to create, education around what VC is and how it can build wealth for individuals who have, the accreditation status and are able to invest. And I think like as we expand the number of accredited investors and create more wealth, we're just going to get additional really like early stage capital for diverse communities, because as these individuals on the LP side build wealth, they'll continue to kind of angel invest or invest in funds in the future. And that really is kind of the seed capital for people within their network. And so if a diverse LP, has the wealth to start angel investing or start investing in funds, the entrepreneurs that are within their network are just going to have a much easier time getting, that angel funding.
I hear you. That's why RBL1 exists. But yeah, all about investor and founder education. What is it? More than 5 million people in the US qualify as accredited. Only about less than 300,000 are engaging in venture. So lots of opportunity. We're definitely with you. If you're in terms of building an expertise, I know we spoke and this shift into CPG, was newer. Can you talk a little bit about even your evolution as a like as a venture fund, and as you have launched in the space? So.
Yeah, so kind of like the CPG side and what we're looking to do with that.
Well, also when you launched it, did you, like in terms of when Capitalize was born, did you know you wanted to focus on CPG off the bat, or and do the revenue-based financing, or did you evolve into that? Would love to hear a little bit on that evolution.
Yeah, I launched this concept around revenue-based financing. That was like 100% a part of what I was doing. And it's funny because like I remember talking to the first kind of LP conversations I ever had, and they were like, "We've never seen this before. Why are you doing this?" And I was like, "Well, why would I want to do the same thing that everybody else is doing? Like all the other thing, like a lot of the other firms in the space, like they're all kind of doing the same thing with the same model. Like, why not change it? Why not do something different?" And so I think, one, I'm an entrepreneur at heart. Like I'm always trying to like solve a problem. And so when I started my firm, I was kind of like, well, I want to solve more problems than the typical, like VC fund is solving. And so I really, really want revenue-based financing to be a part of this, because I think that it can be a new model that really scales and really creates access to funding for these non-tech entrepreneurs.
Absolutely. This is great. It's so interesting because if you look at venture capital itself, because I would consider myself same thing. It's like more of an entrepreneur at heart than, still an investor, but like entrepreneur first, and thinking about venture capital itself hasn't changed in all that long. Like, a lot of folks don't know. Do you know the term carry? I know this is like a sidestep. Yeah. Where it comes from? Do you know?
No.
So the term carry comes from in the, in the like 1800s, there were voyages that used to go out to sea to hunt whales. And it sounds, and that was called a venture. And then multiple people would fund that venture.
Oh, yeah.
And then when the venture came back to, and people would invest, like your GP, right, would invest in several ventures. That was your original GP, and they would get a share of the carry. And carry was the whale fat. when they brought the whales back to shore, they would get a portion of the carry. They were like that carried off the shore, and now we call it carry. Anyway, so has it, a very old, wealthy family lending model, like hasn't all changed that much. It's still, what is it, 20, still 22 and 20, still same structure. So I enjoy that. There's so much room to grow.
I was just talking to somebody today, and I was saying that like we as GPs have such a difficult position, because it's like on one side we're talking to founders and we have to have this like grand vision for the future and be like super innovative, super forward thinking. And then on the other side, we're talking to like the most structured, like old school way of doing things, like when we're trying to like bring capital in from LPs. And so it's very much so like in the middle of this, bifurcated situation that makes no sense.
Yeah, we're trying to evolve on venture itself, so it's exciting to see. I want to highlight your leadership in Black VC and the focus on the Midwest. If you can share with the audience a little bit what's Black VC, and can you talk about your work there?
Yeah, so Black VC is an organization started out of San Francisco. I think it was started in 2018. And the idea there is if we can get more Black, check writers in VC. So these are, people who work in the VC firms. If we can get more people of color, particularly Black, into these firms, we can change the types of founders that get funding. And so Black VC is really all about educating, up and coming VC employees or, managers, I guess, like check writers. And also now, so they have programs around like breaking into venture. So like, what is venture capital and how can you get in? A lot of that is focused towards, college students. But then they also now have programs around angel investing. And so things like Black Venture Institute. So this is like a group of 40 to 50 Black technology employees who are looking to figure out, how can they become angel investors? How can they join a syndicate? And so things kind of around still check writing, but in a different perspective than just being a part of a firm. And so in the Midwest, I lead the chapter here along with Micah Sem from M25. And we're really just, looking to create some community around being Black, being in venture capital here in Chicago and the broader Midwest. So we have, events from time to time, a few events a year, particularly for our membership, which are the Black venture investors, but then also broader events for Black founders, Black service providers, and allies in the city and in the region that are also supportive of us.
Awesome. Yeah, we had Mike on, does great work. So excited about, I think that there's it's a small, close-knit community of a startup, startup and investor community in Chicago. So I have been to several events and excited to start having more in person as COVID dies down. Hopefully.
We have a lot planned for 2022, so stay tuned.
Yeah, well, I'm ready. Awesome. So it would appreciate your time if you could share with the audience, to close it out. What's next for Capitalized VC?
Yeah, so we just did our first close in December. We're doing actually another close at the end of this month, so bringing in more capital. That's something that will continue. And then we are actually making our first investments. And so hopefully you'll be hearing soon about our inaugural investment coming up here in February. And then we have kind of a pipeline of interesting opportunities that we're looking to fund in the next few months. So stay tuned.
Great. Well, thank you very much, Tess. For those that are watching, Tess Flippin, who is the founder and CEO of Capitalized VC. So, founder and managing partner. So thank you again for joining us, and thanks everyone for tuning in.